History books tell you World War I was won with tanks and trenches. They're wrong. The real battle was fought in the vaults of central banks and the ledgers of Wall Street. A war of money that still holds you prisoner today. Welcome to Wealixon, where every story reveals how money, power, and history shape the world we live in. Here, we uncover the patterns behind inflation, crashes, empires, and the lessons they left behind. Let me tell you a story, Dot. It's not about a single hero or a famous battle. It's the story of a trap. A financial trap so perfectly designed that the world fell into it in 1914. And we've been struggling to escape ever since. Picture Europe in the summer of 1914. The air is thick with tension, national rivalries, military pride, tangled alliances. But beneath the saber-rattling and the patriotic speeches, there's a quieter, more dangerous reality. The generals are drawing up plans for a quick war. But the bankers? They're staring at balance sheets, and they're starting to sweat. Because they know a secret the politicians are ignoring. A modern war isn't just fought with bullets. It's fueled by money. And Europe is about to light a match in a room filled with financial dynamite. The world then ran on rules. The gold standard was the ultimate rule book. A nation's paper money was a promise you could walk into a bank and exchange it for real, tangible gold. This system created trust, but it also created a cage. Gold reserves were finite. You couldn't just wish more into existence. So, when Archduke Franz Ferdinand was assassinated and the dominoes began to fall, every marching soldier represented a terrifying financial equation. Mobilizing millions of men, feeding them, clothing them, and arming them cost money at a rate that made treasuries blanch. Germany was spending over 10 million marks per day by Christmas 1914. Britain's daily bill would soon hit £2.5 million. The numbers were surreal. The gold in their vaults? It wouldn't last a month at that pace. So one by one, the great powers did the unthinkable. They broke their most sacred promise. They abandoned the gold standard. Think about that moment. Overnight, the money in people's pockets was no longer backed by precious metal. It was backed by faith. Faith in governments that were now wholly dedicated to destruction. This was the first great financial sin of the war. They untethered money from reality. And once that genie was out of the bottle, there was no putting it back. The age of print now, worry later had begun. But abandoning gold was just the opening move. Now, each nation had to find its own way to pay for the apocalypse. Let's follow the money. Let's see how each major player fought this hidden war, because their choices echo in your economy right now. Germany, the pyramid of patriotism. Isolated by a British naval blockade and cut off from international credit, Germany turned inward. Its weapon of choice? War bonds. Massive, relentless, propagandistic bond drives. Posters showed heroic soldiers staring into the distance. Slogans pleaded for sacrifice. Give gold for iron. Families were shamed into surrendering heirlooms. The government wasn't just asking for savings. It was selling a dream of victory and repayment. And people believed. They poured their life savings, the money for a dowry for retirement, for a small business, into the state's hands. In total, Germany raised over 100 billion marks from its own people. But here's the brutal truth. It was a financial pyramid scheme. The bonds were a promise to pay after winning a war they would ultimately lose. When defeat came in 1918, those certificates of patriotism became worthless paper. Generations of financial security were obliterated. That bitterness, that gut-deep feeling of betrayal, didn't just cause hardship. It festered. It created the perfect petri dish for the radical, vengeful politics that would follow. This is where history teaches us. Financial trauma can be more destabilizing than military defeat. Britain, the network of empire. Britain played a different game. It had the ultimate advantage. The City of London. Sterling was the world's reserve currency. Its financial network spider-webbed across the globe. Initially, Britain too relied on patriotic domestic borrowing. But its masterstroke was looking across the Atlantic. In 1914, America was neutral. Officially. But in the wood-paneled offices of Wall Street, men like the partners at J.P. Morgan & Co. saw not a tragedy, but the deal of the century. They became the Allied powers' purchasing agents and financiers. They arranged the loans to buy American wheat, steel, rifles, and shells. Billions of dollars began flowing from New York to London and Paris. This wasn't altruism. It was a calculated investment. American banks earned staggering fees, and American industry boomed supplying the war it wasn't fighting. This is the pivotal hidden shift of the war. Long before a single American donut set foot in France, Wall Street had already decided the war's outcome. By bankrolling the Allies, they made Allied victory a financial necessity for America itself. When the U.S. finally entered the war in 1917, it was less about the Lusitania and more about protecting its colossal investments. The war transformed America from a debtor nation to the world's premier creditor. The 20th century didn't become the American century on the beaches of Normandy in 1944. It was born in the bond trading pits of New York in 1915. France, the debtor's dilemma. France entered the war still haunted by the debt and defeat of 1870. Its strategy was a painful mix: squeeze its own thrifty citizens for loans while becoming utterly dependent on Anglo-American money. The French middle class, legendary savers, bought Défense Nationale bonds, believing in La Gloire. But the real fuel came from abroad. This dependency created a vicious post-war trap. France needed German reparations to pay back Britain and America. It's a chain of debt that would strangle European diplomacy for a generation. Russia, the collapse of illusion. Then there was Russia, a vast, backward empire with glittering gold reserves on paper, but a feudal economy in reality. To fund its war, it borrowed desperately from its ally, France. But as its armies suffered catastrophic losses, the government made a fatal error. It printed money, not carefully, but wildly. The ruble began to evaporate. Prices spiraled. By the bitter winter of 1917, soldiers were starving and freezing at the front, while in Petrograd, people waited in endless lines for bread that cost a fortune. The Russian Revolution wasn't just a political event, it was a monetary collapse. The Tsar wasn't just overthrown by Bolsheviks. He was overthrown by hyperinflation and economic ruin. It's the ultimate lesson. When a government destroys the value of its people's money, it destroys the people's faith. And without that faith, no throne, no matter how old, is secure. By 1918, the guns fell silent, but the financial tinnitus that ringing in the ears of the global economy was deafening. The numbers were beyond comprehension. The Allies had spent over $140 billion, asterisk, asterisk. The Central Powers, asterisk, asterisk, $60 billion. To put that in perspective, these sums were multiples of the entire pre-war economic output of these nations. The world was buried under a mountain of debt that made the pyramids look small, and the landscape of power had been utterly redrawn. The United States now held over 40% of the world's gold. It was the planet's undeniable creditor. London, the old financial maestro, was now in hock to New York to the tune of $4 billion. The baton of financial supremacy had been passed, not in a ceremony, but through a river of bonds and receipts. But winning the war was one thing. Paying for it was another. And this is where the trap, set between 1914 and 1918, finally snapped shut on the world. The victors, burdened by their own war debts, made a catastrophic decision. They decided to make Germany pay. The Treaty of Versailles imposed reparations of 132 billion gold marks. It was an astronomical, vindictive, and economically illiterate figure. The logic was brutally simple. Squeeze Germany to pay back Britain and France so they could pay back America. Germany, its economy already shattered, had only one tool left: the printing press. It began to pay reparations by creating more and more money. The result wasn't just inflation. It was hyperinflation. By 1923, this story was surreal. People used wheelbarrows of cash to buy a loaf of bread. Children stacked bundles of worthless marks like toy blocks. A lifetime of savings couldn't buy a streetcar ticket. This wasn't an act of God, but it was a direct, predictable consequence of the financial war. The treaty's demands created an impossible equation, and the German central bank's printing presses solved it by destroying the currency. Again, remember the lesson. The middle class, the savers, the pensioners, they were utterly wiped out. And from the ashes of their banknotes rose a bitter, nihilistic rage that would find its voice in a new, dark political movement. Meanwhile, Britain, in a nostalgic fog, made its own historic blunder. In 1925, under Chancellor of the Exchequer Winston Churchill, it decided to restore the pound to its pre-war gold value. This was like a battered boxer insisting on fighting at his championship weight. The pound was overvalued by maybe 10%. The consequence? British exports became brutally uncompetitive. Industries like coal and steel were crushed. Unemployment soared. Deflation gripped the economy. Churchill later called it the worst mistake of his life. But the cost wasn't paid in Westminster. It was paid in the slums of Glasgow and the closed factories of Manchester. The elite's desire for financial prestige doomed a generation to the dole queue. And America? America now sat at the center of the web. Its banks, flush with cash, began lending to Germany, so Germany could pay reparations to Britain and France, so they could pay their war debts back to America. It was a dizzying, circular flow of capital. The Dawes Plan, 1924, and the Young Plan, 1929, formalized this merry-go-round. On the surface, it seemed elegant. Underneath, it was a house of cards built on interlocking, unsustainable debt. The global economy had never been more connected or more fragile. All it needed was one shock. That shock came in October 1929 with the crash on Wall Street. When American banks called in their loans, the entire delicate structure imploded. German reparations stopped. Allied debt payments to America stopped. World trade seized up. The Great Depression wasn't just a stock market crash. It was the final, thunderous collapse of the financial system that World War I had broken, and the 1920s had tried to patch with paper and promises. So why does this story, a century old, matter to you today? Why should an American in the 21st century care about gold standards and war bonds? Because the playbook written between 1914 and 1918 is still in use. The same tricks, the same illusions, just with new technology. We've suspended the rules. In 1914, it was the gold standard. Today, it's quantitative easing and zero interest rates. Central banks creating digital money at a scale that would make a 1914 banker faint. Finance it with debt. Then, it was war bonds sold to patriots. Today, it's multi-trillion-dollar deficit spending financed by treasury bonds sold to, well, to everyone, including the Federal Reserve itself. Inflation is temporary. They said it in Weimar Germany as prices doubled, then quadrupled. They've said it in every modern economy when the printing presses start to hum. The winners and losers. Then, it was the J.P. Morgans and the industrialists who profited, while the saver with war bonds was wiped out. Today, it's asset owners who see stocks and real estate inflate, while wage earners watch their purchasing power slowly erode. World War I taught governments a dangerous, seductive lesson, that they could finance anything: total war, social programs, bailouts, by borrowing from the future and manipulating the currency. It severed the final link between money and tangible value. It made money a pure instrument of policy. When you look at your screen and see a number in your bank account, understand its lineage. That digital dollar is the great-grandchild of the untethered banknote of 1914. Its value is not defined by gold in a vault, but by a complex web of confidence, debt, and central bank management, a web first woven in the emergency of the Great War. The financial system you live in is not a natural law. It is a man-made construct, battle-tested in the first global conflict and refined in every crisis since. To navigate it, you must understand its origin story. You must see the patterns. Real wealth is not the currency that can be created at a keystroke. Real wealth is what survives when trust in that currency falters. It's knowledge, skills, productive assets, and economic resilience. It's the ability to see the long game, because the architects of debt and inflation are always playing one. History doesn't repeat, but it rhymes. The rhythm of financial crisis, the overextension, the suspension of rules, the money printing, the inevitable reckoning is a rhythm we first heard clearly in the opening bars of the 20th century. Our financial freedom depends on learning to recognize the tune. History doesn't repeat, but it rhymes. The rhythm of financial crisis, the overextension, the suspension of rules, the money printing, the inevitable reckoning is a rhythm we first heard clearly in the opening bars of the 20th century. Your financial freedom depends on learning to recognize the tune. This isn't just about history. It's about your present and your future. In an era of digital currencies, soaring national debt, and economic uncertainty, the most dangerous thing you can be is unaware. The patterns of the past are your only reliable map for navigating the chaos of the present. Subscribe to Wealixon. Hit that button and join our community. Because here, we don't just recount events. We connect the dots from the gold vaults of 1914 to the Federal Reserve's balance sheet of today. We give you the context that turns headlines into understanding and anxiety into strategy. Don't just watch history happen. Understand the forces that are shaping your financial life right now. Subscribe today. The next chapter of the story is being written, and you deserve to be more than just a character in it. You deserve to be an author.